We got good news and we got bad news. I'm actually going to start with the bad news first and finish off with some good news in these times. All right, so let's get right into what the bad news is. So first thing, right out the gate, this is from New York Times, and that's going to be relevant for what I want to say about this. It goes on to say that the crypto lender BlockFi files for bankruptcy as FTX fallout spreads. If you guys have been, even somewhat aware of what's been going on in the crypto space, even mainstream media has picked up on it. The exchange FTX, through all kinds of illegal stuff that they've been doing, shady business they've been running since day one, and literally a Ponzi scheme and a scam since day one, and a premeditated scam, let's put it that way. Everything kind of blew up, and so anything that they were affiliated with or tied to was obviously going to feel the effects and will continue to feel those effects for some time. BlockFi, which was supposed to be saved by a subsidiary of FTX, now doesn't have that fallout safety net, as these guys like to put it, because of everything that's happened with FTX. So this is not a surprise, but I want to go through this article, and why the New York Times is so relevant in the story is because they have done everything in their power to protect Sam Bankman-Fried and his reputation. They even had a live event where he still accepted an invite. They gave him an invite, he accepted it, and still went through with it to do some public speaking for a New York Times event. So that's just mind-blowing to me. But I want to go through some of the stuff here. All right. So BlockFi, a cryptocurrency lender that targeted ordinary investors eager for a piece of the crypto mania. So again, they frame things in a certain light. Now, was there mania? Was there, from the ordinary investors who wanted to be a piece of the bull run? Of course. But that goes for any industry, right? It just happens. And it says Monday it fell by its financial ties to FTX. But here's the interesting wording here, right? The embattled exchange, whose recent downfall has shaken the crypto industry to its core. The embattled exchange. This isn't something that is normal business, like an operations failure. Like everyone's gonna point to they don't have a board and all that kind of stuff, but they were stealing money, and yeah, maybe the board would have overlooked that and kind of not been obviously complicit in it. But this is not just operations kind of fell apart. This is a scam from day one. So this is not a sympathy story for FTX. It's been an embattled exchange that's kind of caused some issues. But they go on to say, on Monday, BlockFi, which was founded in 2017, filed for Chapter 11 protection in New Jersey. Its implosion is the latest example of an industry built on shaky foundations, with companies so intertwined that a single wobble can unleash financial chaos. Okay. Well, that doesn't sound very similar at all to anything that you would know, right? I mean, Lehman Brothers collapsed, everything else around it collapsed. But wait, why didn't everything get jeopardized? Oh, because the Fed stepped in. And because they printed money at will. Fake magical money that everybody kind of calls Bitcoin and any crypto asset is literally what fiat is, because they can print it on a whim. That's what they did. That's what they continue to do. So that you want to talk about shaky foundations. Shaky foundations is a current traditional model. It's built. It's on a foundation of a deck of cards, and they cannot let one thing fall apart because everything would fall apart. So they bolster it by just printing more money. So it's always funny to me when I hear crypto's built on shaky foundations. Everything that financially is built on shaky foundation. They just continue to get support and bailouts when they are struggling. And in the crypto markets, you don't get that bailout. Things happen. Someone who is going to help you goes under. No one is going to step in to save them. So which one is on the shaky ground, really? Goes on to say BlockFi isn't the first crypto lender to file for bankruptcy. In July, two of its rivals, Celsius Network and Voyager Digital, collapsed within a week of each other. They were struggling to right themselves after a market panic in the spring when the value of many high-profile cryptocurrencies plummeted. Bitcoin alone fell 20% in a week. Here's what's funny. I mean, we all know in the space that Celsius and Voyager, the collapse of those entities, as well as Three Arrows Capital, was orchestrated by FTX. New York Times knows this. But they just kind of made it seem like it's the natural order of things in crypto, and the dominoes start to fall apart. Now, the collapse of Bitcoin, of course it had something to do with it, but again, that was all orchestrated in large part to the things that FTX and Alameda Research were doing. The Terra Luna, the Celsius Network, the Voyager, they were collapsing things left, right, and center because those people were their competitors. But we're not getting any of that here, right? It's just crypto is on shaky foundation, and things just fall apart when one thing falls apart. Okay. Now, remember, traditional model as well. Everyone is borrowing from everybody. Everyone knows something about their competitors that they would like to kind of take a piece out of. For example, when they're shorting the market, certain big funds are heavily involved in a stock that they are expecting to collapse or to decrease in price. And so they kind of push that narrative. And then those around them who know that these guys are heavily into that position will do everything that they can to reverse that position and collapse that fund. That's normal business. But they make it seem like here, everything is shaky. We'll talk about that. So they go on to say, BlockFi subsequently borrowed $275 million from a subsidiary of FTX. That financial entanglement meant that when FTX toppled and was forced to file for bankruptcy amid revelations of corporate missteps and suspicious management, BlockFi began to struggle too. I mean, that's not even scratching the surface of what happened at FTX. Corporate missteps? Yeah, that's the least of their problems. Okay, suspicious management? Yeah, maybe they're finally starting to dip their toe into what it actually is, but that doesn't tell the reader who knows nothing about FTX does not know what that means. So vague. It goes on to say a few days after the exchange collapsed, BlockFi told customers that they couldn't withdraw their deposits because they had significant exposure to FTX, including additional funds the company had hoped to draw on under the agreement and other assets held on the FTX platform. So this is all part and parcel, right? I mean, in one respect, this is all because they were interlinked. All these central exchanges were doing was replicating the traditional model, right? That's all they were doing. They're just in league with each other, doing all this lending stuff, over leveraged, and just doing all kinds of nasty stuff. And when things implode, everything goes with it. Okay, so the fact that as soon as any exchange says you cannot withdraw, I mean, that obviously is a problem. But look, happens to banks, right? When there's some kind of conflict going on, even if you go to the bank now and you say, I want to pull out $100,000 or $50,000, whatever you have in there, for the most part, if it's a large enough sum, they say we need time. So they don't even have it. So they go on to say BlockFi still owes, this one is always crazy to me. Okay, so BlockFi still owes the SEC, Securities and Exchange Commission, $30 million. Okay, and it goes on to say who else it owes. And, you know, there's a trust company that's the number one creditor here with $729 million. But let me ask you this. The Securities Exchange Commission, the one responsible for protecting the consumer, the user, the average person, right? That's their job. Why are they owed $30 million before any of these users are going to get their funds? That doesn't make sense. The head of the SEC, Gary Gensler, was actually working closely with Sam Bankman-Fried. So that doesn't make any sense. They were in league. They knew what was going on. And all of a sudden now they owe that same regulatory body $30 million, which they will get paid out before any of the other users will get paid out. How are they really fighting for the people if that's the case? They knew about it. They didn't stop it. And then when it collapsed, they're on the books as being owed money in which they're going to get first before the user. Make that of it what you will. So this is all a sordid affair. There's all kinds of stuff. It continues to happen. There's a lot of fallout that's going to happen from this, probably more so than now, right? But I think we're getting the bulk of it. But if we have another exchange go down, it's just going to continue to spread that way. So that's the negative, bad news here. The good news I want to share with you guys, and it really is good news, all right, is right here. So as a tweet here that meanwhile, number of addresses holding 0.1 Bitcoin or more spikes to an all-time high. Institutions are wrecked, meaning they're collapsing, while real Bitcoiners withdraw to self-custody. So what this chart is actually showing, is on, let's make myself a little bit smaller. Okay, so what it's showing is on the right side here is that the price of Bitcoin. On the left side is the number of wallets that are holding 0.01 plus coins of Bitcoin, and the bottom here is the time frame. So you can see that as the price has been doing all of its business, still on an upward trend, really, the number of wallets that are holding 0.01 plus Bitcoin continues to increase. And that is significant because, large institutions hold quite a bit. 0.1 and above, that's the retailer. That's who this is all made for, is to own your own assets, to have a chance at financial freedom and a chance at generational wealth. That's what we're accumulating here. So when you see, look where the price of Bitcoin is just tumbling, right? It was up almost 70,000. Now we're sitting around 15, 16,000. But look at the number of wallets that are holding 0.01. It's just shooting through the roof, going to all-time highs. Massive, especially now where it's just crossed, right? This is great news. This is absolutely great news because this is the network effect. This is what everyone is fighting for. It's not just, let me make a short-term trade. This is for everybody and anybody who can get a piece of Bitcoin, which we all can to some degree, as long as you have an internet connection and you can jump on an exchange and then remove it. But that's the key, is removing it to your own wallet. BlockFi is showing that, Celsius has showed that, FTX, all these guys. Even the quote-unquote safe exchanges, are they really safe? Who knows what's happening behind the scenes? Most of them are still using the same model of management that they came from, which is the traditional markets. So self-custody, take care of your own assets, especially Bitcoin. You don't want to give that over to anybody else. But I wanted to really end on a positive note, because as much as there's doom and gloom in this space, building still continues to happen at a fevered pitch. You just don't know it, or you can't see it. It's not apparent. They're not the loudest voices in the room. And adoption is happening. It's happening. People are seeing it. People are seeing especially the value of Bitcoin. So continue to accumulate. If you're sitting on the sidelines, my personal opinion is always, what are you waiting for? I mean, if it's at 15 and you want to go to 10, when it goes to 10, you're going to say, I'm going to wait for 5. That's a never-ending cycle. In my opinion, dollar cost averaging is by far the greatest strategy you can use. Continue to accumulate, and let's create some generational wealth and some ownership moving forward.